So, Vance, let's get to your word of the day. Your word of the day today is productive. And I was trying to figure out what could this be alluding to, because we got a government shutdown going on. We're still a couple days away from earnings season. What productivity are you seeing?
We got to stay positive, Frank. Man, don't think about all these negative things. And by the way, government shutdowns never work. They're a comical joke anymore. We've been having government shutdowns. I mean, what, twice a year for the last 5 or 10 years? So they don't work, and they're a waste of time. But I think everybody needs to look at this market and be incredibly encouraged. I mean, the last quarter of every year, historically, 81% of the time has been higher. So your chances of making money in the last 90 days of this year are 81%. So I think those are very good odds. People need to stay long this market. They need to look at stocks that have been beaten down, that are very quality stocks, and stay productive. Get in there and make some money.
All right, so you're focused on seasonality right now. A lot of people are. Q4 is generally the best quarter of the year. However, we do have some outlier situations. I know you said the government shutdown is not a big deal, but what about this? The fact that we're not going to get the jobs report coming up on Friday. We potentially, if the shutdown lasts, won't get CPI and PPI. Isn't that a big deal? Couldn't that kind of break from the trends that you're talking about?
I don't think so. I mean, if we push numbers back a little bit, no, I mean, what really changed over the past 24 hours? We shut down the government. We know what's going to happen. I think in some ways, if you look at it from a Democratic and a Republican stance, I think the Democrats are really playing into Trump's hands. Now he's going to start laying off more people, and Doge just, just jumps in there and continues to pull back employees from the federal government, which reduces the spending, which, some ways. And also, Frank, we got to look at the debt on this thing, too. I think the Democrats want to run up $1 trillion worth of health care debt, and that's the reason they're shutting down the government. But we, too, need to take a very strong look at the debt. That is one of the things that does keep me up at night, is our debt is just too large and it continues to grow. And that's going to be a problem we're going to have to address as investors and as a country.
Fair enough. I want to talk about the market action we're seeing this week. We're seeing a move into defensive sectors like healthcare and utilities. In fact, utilities hitting an all-time high. Healthcare is the best performing sector this week. At the same time, tech's hitting a new all-time high. What does that say about this market and where investor sentiment is?
Well, it says it is pretty broad. I mean, it says investors are coming in and investing into a lot of different sectors, not just one. But technology is still clearly our favorite.
But is this a genuine broadening, Vance, or is this a defensive trade?
A wonderful investment. I think going into the last quarter, I think everybody's going to be very, very happy that they own the Mag 7.
But, Vance, very quickly, is this a genuine broadening, or is this a defensive trade? Because we are seeing some U.S. volatility.
Well, it could be for 24 hours, but, this kind of reminds me of the scene in, Airplane, with the comedy where everybody's running around with their hair on fire and nothing really happens. And I think that's what's going to happen here. I think this is a good dip buying opportunity, but we're not seeing a dip. The market doesn't seem to care. So I think you continue to push your winners, continue to buy winners, and continue to add to your position. We're 100% invested, so really we can't even buy on the dips anymore. What we can do is rotate our money to more productive areas or more productive stocks. And that's what we've been doing, and it's been very successful for us all year long.
So, Vance, you are actually practicing what you're preaching when you're talking about investing in winners. One of your pick for us today is Hims and Hers Health. Huge run up over the last month. I believe shares are up about 30% over the last month. What are you seeing there?
Well, here's what I like about this, Frank, is that I like recurring revenue, things that have recurring. You and I've talked about this many, many times. The FDA sent out a letter to Hims, and they said, hey, we're not really too keen on how you advertise. And that's all they said. It was just an FDA letter. It didn't mean anything. They didn't do anything. This pulled the stock back to what I consider to be a really nice opportunity for investors to come in at a lower price on Hims. And again, Hims has recurring revenue. They have prescription drugs, and people are buying them, and they're making money each and every month just off recurring revenue. And I love recurring revenue.